The Firm, India's only show on corporate law, tax and audit matters.
Hello and welcome to The Firm. On the show this week, why the Murugappa Group chairman has been accused of insider trading, and an ordinance seeks to resolve the jurisdiction confusion over cheque bouncing cases. While he's the most high-profile fish SEBI has netted so far, the securities regulator has charged Murugappa Group Executive Chairman A. Vellayan with insider trading. While Mr. Vellayan has not traded himself, he stands accused of passing on unpublished price-sensitive information of the acquisition of Sabero Organics by a Muruguppa Group company, Coromandel International. In an interim order, SEBI has linked Mr. Vellayan to suspicious trades in Sabero's stock. Aayush Ailawadi details SEBI's case.
The story dates back to May 2011. At the time, Murugappa Group-owned company Coromandel International was about to acquire Sabero Organics. As Group Chairman, A. Vellayan was privy to unpublished price-sensitive information about the imminent acquisition. SEBI in its investigation has traced financial links between Vellayan, his uncle Murugappan and Gopalakrishnan and Karupaya, the two individuals who traded in Sabero shares before the acquisition.
On the 23rd and 24th of May in the year 2011, Mr. Gopalakrishnan purchased 3,19,500 shares of Sabero for nearly 2.7 crore rupees. This was the only trade he had made in 2 years, and the trade value was several times his indicated income. Another individual, Mr. Karupaya, bought and sold 40,750 Sabero shares before the acquisition announcement, and though he traded in other shares as well during that period, the Sabero trade amounted to 64% of his transactions. SEBI found Gopalakrishnan and Karupaya's trades unusual, and on further investigation found that both were connected to Mr. Murugappan. Karupaya is his son-in-law, and Gopalakrishnan was funded by Murugappan. On the 28th of May 2011, Murugappan prematurely redeemed a fixed deposit of 1 crore rupees and transferred the money to his son Subramaniam, who in turn passed it on to Gopalakrishnan. All the transactions took place on the very same day. After the trades, Gopalakrishnan returned the money to Murugappan's son.
SEBI has done a good job in tracing the trail of money between Mr. Murugappa, Mr. Subramaniam and Mr. Gopalakrishnan, right? But that trail has been sort of established, and one could allege that, given the trading history, given the fact, given the money trail between these three persons, it smells sort of fishy.
The suspicious trades led SEBI to believe that Gopalakrishnan and Karupaya traded on the basis of unpublished price-sensitive information. But how did they find out about the acquisition? To answer that question, SEBI traced a connection to Murugappa Group Chairman A. Vellayan. It found that Vellayan is Murugappan's nephew, and hence the regulator alleged a connection with Karupaya and Gopalakrishnan as well. SEBI's order also mentions that certain transactions took place between Murugappan and Vellayan, namely a 1 crore rupee advance payment to Vellayan for a property transaction that did not materialize, and hence Vellayan returned the 1 crore to Murugappan. But when this transaction took place is not disclosed. Based on these connections, SEBI alleged that Vellayan communicated the unpublished price-sensitive information regarding Sabero's acquisition to Murugappan and others, prompting them to trade the stock. Hence, it has charged all four with insider trading and passed an order impounding the unlawful gains.
Since the case dates back to 2011, the 1992 insider trading regulations apply. Under these regulations, to prove insider trading, SEBI has to prove that they were all insiders. One criterion is to prove that they had inside information.
Fine, Mr. Vellayan is the chairman of the Coromandel Group. There was a meeting on 15th of May 2011. Wherein he attended the meeting, he appointed legal advisors, other intermediaries, and the due diligence process did commence from that particular date. but it is just a presumption that yes, Mr. Vellayan, because of that distant relationship with Murugappan, has passed on that information to Mr. Murugappan that there is an impending acquisition of Sabero Organics, and therefore the unpublished price sensitive information has been communicated by Mr. Vellayan to Mr. Murugappan. Except that there is nothing else.
The insider trading regulations say that the person trading the shares is an insider.
Or SEBI must show that those who traded were connected to an insider. The definition of a connected person includes company officials and their relatives.
Now, whether under the old regulations or under new regulations, relative is something that has been defined. Under the old regulations, it referred back to the Companies Act, Section 6 of the Companies Act, and the schedule that was attached thereto. And even if you look at the list of relatives under the under Section 6 of the Companies Act, of the 1956 Act, this lineage would not fall within the definition of relative under the Companies Act. Now, even under the new regulations, that definition has become even more narrower, and definitely such a lineage would not fall within the definition of relative or immediate relative under the new regulations. So the only link that the SEBI has tried to draw between these two persons seems to be sort of unfounded. Doesn't lead to the conclusion that there was a deemed connected person incidence here.
At the heart of this case are suspicious trades in Sabero stock days before the acquisition was announced. But SEBI's order does not detail any proof the regulator may have that Vellayan communicated information to the others, nor does it suggest how Vellayan gained from the trades. The order refers to a monetary transaction between Vellayan and Murugappan, but its timing is not disclosed.
SEBI should have done little more deep dive into it to find out as to how did Mr. Murugappan or Mr. Gopalakrishnan got this information that there is an impending acquisition by Coromandel of Sabero Organics. It's possible somebody else must have passed on that information. That doesn't mean merely because Mr. Vellayan and Mr. Murugappan are distantly related, it is presumed that yes, Mr. Vellayan has only passed on this information of this acquisition to Mr. Murugappan.
I think SEBI is right to investigate such a matter, is right to have to look at such a transaction when there has been money flow, and there is no real basis for why such a securities transaction was conducted. But having said that, it needs to be really careful as to how it alleges how the information was passed, because the consequence on that person, and if you see, there is no profit motive or no alleged profit being made by Mr. Vellayan. So that has a very dire consequence.
This is an interim order, and SEBI has given the parties 21 days to respond. It has also directed that the investigation be expedited and preferably completed within 3 months. But the interim order has prompted A. Vellayan to step down as group chairman and clouded one of South India's best-known business groups. In Mumbai, Aayush Ailawadi.
Well, this promises to be a headline-grabbing case as it develops. On that note, let's take a quick break on the farm. Coming up next, an ordinance seeks to resolve the jurisdiction confusion over check bouncing cases.